We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up NZD, JPY. We are on the 12-month time frame. Price action last candle to right hand side is a bearish red doji cross inside the second last candle. Current price is sitting at 82.926. So if price pushes up further of the highest high overall, it can head up to that red and green leveled off at numbers of 93.401. Before making it there, you want to see the price action overlap the second to last candle to push up to that area of the previous numbers we read off. So we're looking for price to engulf over that to at least lead up to the area of 88.352, which is the previous number that we read before that. And if price action pushed down, it can head down to overall would be the second to last candle to market, bottom of that wick, which would be the price at 75.169. Before reaching there, price action can tag the second last candle bottom of that body, which would be near the numbers of 978.816. So let's read the market to see what's going on. We can see the market also is trying to come off the price of the area to the left hand side of the second last candle, which would be looking for the engulfment of nearing the numbers of 83.303. So price can head back to 83.303, push up, or it can just identify the rejection and working its way down. So let's take a look at what's going on in the market and what could be happening at this area of price. So we can see we have price action. If we look at the price action low in green, we have a pattern at that area. So it's in that area when that market did spike those lows, that overall low structure for that red and green, it did identify that first leg, second leg, third leg, and all the way to a high and create a double bottom. Once the market went to that double bottom, pushed to that high, it did come back to retest, and that will be the retest of the middle of, near the middle of the double bottom that was formed. So we can see that market touched up to a high, came back to retest that previous side, caught the momentum with the support at the area. So that's like the overall midpoint line, as in high, low, mid. And then price pushed up to the midpoint of, so we're going to break this down. Let's go back. So what price is currently at, we have overall high, we have mid, and we have a low area here. Price tagged the second level highs in that area, and if it's rejected, it'll come down from that pattern. So if so, market's coming down from that area of the previous side, which will be identifying the first, second, third, and we get the engulfment towards the second and last candle. Bearish red drops down, creates that double top formation, and we'll see if it's going to break down further to the following level. And before touching, if it does lead back down, before touching overall lower lows of structure, it can tag second level lows. That would be the midpoint of the double bottom in this area, and the area of the spike downs to a low with the fourth and some of the fifth to last candle in the market. So heading over price. So if the market does push up further, it'll just identify 1, 2, 3, 4. Retest, the market pushes up. What this area is identifying is another retest. So think about putting a midpoint between that second level highs, identify as first, second, third, fourth. Retest, market spiked up, retest the second level highs area, and the market could be pushing up. If so, it'll identify as starting off at the double bottom, broke retest, create another double bottom, and the market pushed up from that area. Or we can receive the consolidation. The consolidation will be the inside of the second last candle, which we do have price action inside that second last candle, which we do have that consolidation. Okay, it could be identifying a break and retest as we walk down the time frame, but we'll identify as we go along. Walking down to the 6-month time frame, so price action on the 6-month time frame, we have a bearish red doji cross, still second last candle bearish red doji cross. This market is consolidating, primarily in the third to last candle in the market. It will break out to the area to the top side or the bottom side, depending on the angle or the pattern, because sometimes it can come off the third to last candle, top of that body or the middle of that body. You'll see that body form. Sometimes it's not at the top of the third to last candle wicks, or at the bottom, maybe a little tighter, which would be inside the bodies of the third to last candle. And this is why we have that consolidation. So we can see that price second is inside the third to last candle, and is we waiting for that pattern to form. If it's respected for that support on the 6-month time frame, we'll identify as a first, second, third. Market pushed up, overall retest with the price in second, and then we're looking for a bullish green candle to push up out of that area and create that double bottom and retest, and price can head up back up to the previous numbers of the highs at 93.401. Walking down to 3-month time frame, so price action 3-month time frame reading as a bearish red doji cross, second last candle, bearish red doji cross inside the third, fourth, fifth, primarily the sixth to last candle. Market is consolidating within the area, making it a little tighter, going inside the sixth to last candle body, and we can see that pattern that can be being formed in that area. Now, if so, it'll be identifying as, let's put a zone around that area. So grab that body of that candle, starting with the sixth to last candle, and we can see that market's in that range. So when the market's ranging and consolidating, we're waiting for that pattern to form. So far, what it's reading as on a 3-month time frame is market spiked up, back with the red candle. So this could be identifying as a first, second, price is second, is dojis side by side. So overall retest seeing candles, and it could be pushed up with the bullish green candle. You'll see that double bottom in that area breaking out that zone. Walking down to the monthly time frame, price action on the monthly time frame reading as a bearish red doji cross, still inside of the zone as we can see. But what we're reading as, we're trying to figure out what's going on, what's happening. We can see we created that zone, market dancing around in that zone side by side. And if we look at the high, we can see we have multiple touches to that high. So overall, first, second, third, fourth, market went back to the zone, retest with the second last candle with the touch, and then price action pushed down a little bit. So you can see a double top of the retest. So we're going to see if it's going to follow down with the bearish red candle, drop that market down, unless it creates momentum off the support, which would be the second to last candle of the market. If so, this will be this on the weekly time frame, it will be the fourth to last candle in the market, which can be identifying as a first, second, third, fourth. Retest with the price in second with inside each other, and market pushes up for that double bottom and retest, or overall triple bottom. Price action on a weekly time frame is reading as a bullish green candle side by side with the second, inside the overall third to last candle, fourth to last candle. Daily time frame, price action reading as a bullish green candle, more like a doji, inside the second, inside the third, so inside the fourth, inside the fifth. So the primary candle, from what I see, would be the fifth to last candle in the market. So we're waiting for that pattern to form on a daily time frame to push that market up or down. Now, if the market pushes down from this area, we see that decline is coming from the first, second, third, get a bearish red candle, drops down for that double top. Working our way to the 4-hour time frame, price action 4-hour time frame, reading as a bullish green candle. So we do have the bullish green candle, price second, third, fourth, fifth, sixth, seventh, and some of eighth is all within each other, trying to find an area. So going backwards in that the price second, third, fourth, fifth, sixth, seventh, eighth, ninth, and 10th last candles in the market is the areas we're going to see the market breaks out of that area to create that pattern. So far, if it's respected, we'll see that first, second, third, market pushes up with this bullish green candle, looking for the engulfment towards the second last candle. Price action body is above the previous body, price action wick is above the previous wick, can push up with another bullish green candle to push that market up for that W formation. Okay guys, very important information. Please review and study Forex pattern cheat sheet. Click on images, breakout and retest strategy, click on images. Okay guys, this is Cam Jones, FX, NZD, JPY.